What's going on, guys? In this video, I'm going to cover the concept of gaps, and I wanted to talk about gaps because there's been a lot of them in the market recently. So I just want to cover how to identify them, how to find them on your charts, how to think about them, and more importantly, how to trade them. So the definition I'll use, and this is more or less a general definition you'll find anywhere, is that a gap is said to occur when the opening price on a day or in a session, when that opening price is outside of the high or low of the previous day. So that means it's opening outside of the previous day's high or low, outside of the previous day's range or extremes. You can find it pretty easily. This is the SPX chart that I've got up here, and the S&P. And what happens is, and by the way, you'll notice it cuts off in October. I think the reason is I stopped paying for index symbols. Rather, I just use the futures. But anyways, you can see the gaps very clearly here. This one maybe small, but you've got one here, you've got one here, and you've got one here. The other thing I'm going to do is talk about finding these on a TPO profile, and everybody knows who's watching this probably knows that I use the TPO profiles a lot for my trading analysis. You can also easily spot these because they're going to be really visible at market open. So I'm going to type in the definition for this, and I'm going to use the gap here on 1113 into 1116. All right, let's move. I'm going to edit this so that it looks all right, just making it a little more visible here. All right, so there it is. And you can see that this A right here on my charts is the opening price. This was the previous day's extreme. This was the high. This is the opening. And that was the gap at that time. Now, what happened was it came down and filled part of that gap. But anyways, that's how you identify this. All right, so I want to talk now about analyzing this and how we use it to actually, make objective views about what's happening in the market. So the thing that I always like to talk about when I'm thinking about the market is that I'm always thinking about if something has changed or not. If the market's going up, then we know it's going up. But if the market's going up and stops going up, then something's changed. And it may present an opportunity either to close a trade. So you may say, hey, it stopped going up, and you close that trade. You may see something different. You may see a market that's going sideways, and then that changes and starts going down. And you may decide to take a short. And so that's really what I mean when I talk about what's changed. The other way you can ask this, the way you can think about this, and it's another way that I've posted a lot about on my Twitter, is just that what is the market trying to do? Is it doing a good job? And so let's, take it, because we're talking about gaps here, let's just consider what happened here on November the 13th. And I'm just choosing this at random. So on the 13th, we saw that the market opened down here, went up a little, it went down during C period, and eventually moved back up. What happened, and we can see down here that was the 13th, so it must have been a Friday, and the 16th was the Monday. What happened was that something either over the weekend, overnight, happened to change that. So whereas the market thought that price or that the futures they found value down in this area on Friday, well, something changed. And when the market opened, traders were starting to see that something changed, and now the market thinks that this market is actually finding value up in this place. So that's what a gap communicates to you. It's the market's attempt via what traders are doing to get the market out of balance. We would read this, especially in a gap like this one that, opened pretty much, 36.12. That looks like 20 points higher. When you see something like that, it can really mean that the market is really getting away from value and really out of balance. And it can communicate two things to you. One, that value is being accepted higher, or that it's not. And so when you see one of these gaps open up, the two things that can happen is either this gap is going to hold, and that really validates that move up or that gap up, at least for the time being, or that gap can get filled, meaning that the move up was rejected. So if it's a gap up, let's go back to this 13th to the 16th example. If it's a gap up, but traders and sellers are not able to get this gap to close, meaning sellers are not able to trade back down into that area between the two, into that gap, then we've got, at least for now, buyers that are strong enough to keep the market from going any lower. Now, another thing that can happen, let's move over here to the 23rd and to the 24th. We had a situation in which on the 23rd, market opened here, went up, came back down, and really balanced, rotated inside that range all day. On the 24th, we had a very slight gap up. So again, moving up to this A period, and immediately this gap was filled. What we have here then on the 23rd going into the 24th is a different situation, and that means that the gap gets filled. You can see here what happened was that early in the morning, that gap got filled, and that tells us that sellers were at least given a chance to take the market lower, but we can see, based on what happened the rest of the day, that they did not take that chance. So let's break this out briefly just to put these into their own column. We can see that the market opened here on this gap up, filled it, and then moved up. And so that was just the way we can look at that is that the market tried to get out of balance. Sellers had that opportunity to bring it back into balance, weren't able to take it. The one thing I'll point out too is that we had this gap up overnight. What we always need to do is make sure that when these gaps, and when we're doing analysis to see if these gaps got filled or didn't get filled, to get filled, it needs to happen in regular trading hours. So you just want to make sure that you keep that take that into account. Generally speaking, if we continue to see gaps up day after day, then that's one thing that we can take to mean that traders are either getting too long, they're starting to get away from value, or it can mean that the market has found a new catalyst and is starting to trend upward. But when you get 2, 3, I've seen, I think recently, like 4 or 5 days in a row where the market's just continuing to gap higher and getting higher, it can be a signal that the market's starting to get really too long. The market's starting, buyers are starting to trade on momentum. People are starting to feel that, sense that they're missing a big move, and they start to continue to pile in, and they may drive prices up overnight, causing the market to continue to gap up. And so that's just something to take into account. Now, I'm going to move to another view. I previously marked this. This is just a really far zoomed out picture of almost the last month here. And you can see that on starting in November, we started having these gap up. I believe this was another gap up here, but you can see it got filled. But these two gaps remain, and those are going to be reference points to carry forward into the future. Now, if you've been following the markets in the last couple of months, October and November have been, hugely important and also a bit volatile in the market, just because we had vaccine news coming out constantly about the COVID-19 pandemic, and we've had some really interesting election turmoil in the United States that's caused these markets to do some of that gapping up. So, these gaps do exist down below, and those are going to be reference points that you always want to carry forward in the event that we do break back down. At this point, 3,400 is that one of the gaps below, and we're well into the 3,600s at this point. So, it's going to take quite a move down to fill some of those gaps, but at least in the near term, these things are going to be worth carrying forward from day to day. All right, so I want to talk about a few strategies now, putting some of this that I have described together. We've talked about identifying these gaps, but and I've also talked sort of about what they mean intuitively. So if you're thinking about in terms of market getting too long and short, balance, imbalance, for those who are in the Trader Manifest, this is going to be a way for you to look really deeply at balance and imbalance. But these are the kind of things that you want to start to put together for your trading. So I've set this up previously. We're here. I'm going to do a replay just to show this, but this is on October 23rd, 2020. From the 22nd to the 23rd, there was a gap up here. It was pretty minor. It's pretty small. And what I'm going to do is just put this on play so that we can watch what happens. All right, so we're playing at 1 times speed. I'm going to move it up to 2. All right, so early on, the market's gapped up. Remember, this, I'm going to pause it quickly. This gap can either hold or it can fill. So if it holds, so if this gap, so we have this gap here, if it holds, that means that it does not trade back into this gap area and moves up. So that's what a gap hold looks like. Otherwise, if it opens up here, we're going to be we're going to be watching to see if it comes back down into this area. So, we had that move. We have this gap up, and right now in the early going, we're just going to be watching to see if it fills or goes up. So I'm going to start this again. All right, so we're now 1 minute into the market. It traded a tiny bit up at open, but has really been unable to capitalize on any of this upward momentum. And now you can see that sellers are coming in and bringing this back down. Now there's 2 things to think about here. I'm going to pull this pin back out. So one thing is that between the previous day's close and then the 1023 open, we had this area where buyers overnight were able to drive price upward. So one thing to take into account is some of those buyers that have gotten into the market overnight may want to close. And so we may, we oftentimes when we have that overnight inventory that is long like that, for those who are familiar with this concept, there may be a counter auction to bring it back down. So I'm going to turn this back on. All right, and we're playing again. So we had that move up, and ever since then, it's just been a move down. We're getting very little action, very little tempo, and price is kind of sticking right here. But it's not, so far, it's not showing me any sign that gap up is really an indication that really strong buyers are here and starting to really take the market up. So we're about 2 minutes into open on this day now. And my analysis now is that at this point is that sellers have come into this market and have started to counter auction down a little bit. We've got that little bit of information, and it's still kind of trading in this area, and we're seeing that there's not a lot of enthusiasm taking it either way. Now, if buyers were enthusiastic overnight and able to gap the market up, one thing you would want to watch to see if the buyers are able to do that. But what we're seeing is that sellers are able to, at least so far, begin to fill some of that gap. I'm going to speed this up just a little bit now. Still not getting a lot of traction up or down. And then there's your down move. And now the gap has been filled. Why? Well, because the previous day's range has been taken out and sellers have moved it down. So now you want to shift your attention. There's a couple things that can happen here. So one, we failed to get continued buying that took us up. We did get some selling that brought us back into this gap. So far, you can see what time it is. Remember, I'm in Denver Mountain Time, so this is 7:35 in the morning. And what we're taking from this now is the buyers weren't really that strong, and we're now curious to see, are sellers going to be strong? A lot of times, and theoretically at least, when buyers do have that, are able to make this gap up, but then sellers are able to bring us back in, a lot of times your destination and the trade that you want to do is sell. You want to go short here and then target the previous day's other extreme. The reason being, and this is purely theoretical. The reason being is that buyers ultimately failed to get us really anywhere above that open. It was a gap up overnight, and now sellers are present. So the first clue and the first thing that we're going to look at, I'm going to start to really speed this up now because we don't need to watch the entire day. All right, so I'm now at 60 times speed. The A period has filled the gap, and now what I'm going to shift my attention to is just start to watch value. And you can really see that after that gap is filled, sellers weren't that strong in taking us back down, and actually value is beginning to develop higher than yesterday. Now, it's not completely higher. So this is value here from the previous day, and this is value today that's around 1023 that's developing. And what that means is that value is starting to actually develop higher. So sellers were able to bring us back down into that gap, but they weren't actually able to migrate value down. And so you start to get this overlapping from the previous day. And what that's going to tell me is that it's going to probably just be a rotational day. Why? Because value just kind of has this overlap right here. Buyers weren't able to take us any higher. Sellers weren't able to really bring us any lower or to establish value lower. And so that, that really makes them kind of, sellers kind of weak and buyers kind of weak in this situation. So while I'm going to pause this, I'm going to set up my next replay. I want to talk about a couple takeaways just from that first example I showed. One, and maybe most obviously, is that those smaller gaps are going to be easier to fill, right? Because if you have a gap up, and I think that I said that one was like 10 points or so. If you have one that's like 30, obviously it's going to just take a lot more trading to get that back down to close that gap. And so, that's the first takeaway. These small ones can be easier to fill. Second of all, when you get a situation when the gap fills pretty early on, the thing that, and actually let me set this up. When you have that gap fill that fills pretty early on, you want to start watching developing value to start drawing takeaways for what's happening. And then I also wanted to point out, and I wrote this down in my notes too, it's just that when you start to watch for that value that's developing higher or lower than the previous day on a gap fill, all right. When you have that value that's developing that you're watching, that's just one of the innate differences in using the TPO profile over bar charts. It's not price based, it's time based, and so that's kind of the advantage that we have there. All right, let's use 1015 as an example now. I had it set at 60 times speed still, and so it's moved about 20 minutes already without us. For that reason, I'm going to back this up by about 20 minutes. All right, it didn't quite back me up, but anyways, what I'm trying to show in this one is that in this case, on 10/14, on October 14th, we had the low, getting used to this pin here. We have the low here. And then we had the open down here. And then this is our gap. All right, so what happened was, I'm going to start the replay again, was we had this gap down, and we can draw a couple conclusions from what happened. So we had the open there. We can see that after it opened here, it came down. And then what happened next was that during the A period, there was a pretty steep recovery from that down move. So what this tells us so far is that there was a gap down, but sellers who brought us down were really not able to get any traction overnight. Now, We're 19 minutes into the session, so there's a couple things to draw attention to. Now, one is that because sellers took us down overnight, some of this move up at least has to be credited to the fact that some of those sellers are covering their positions. Again, covering means that those sellers are buying back those positions, and that can cause the market to start to move up and get some of that counter auction. But what I'm going to do, and I'm going to speed this one up as well. We've still got this massive gap right here. Now, some of this counter auction is starting, and theoretically, we can interpret this as being so far a move down and a failure to get any real traction to the downside. You can see that here we are in A period during the first 30 minutes, and this has moved an entire, let's call this 34.30 to 34, almost 60, almost 30 points in the first 30 minutes. That's a pretty enthusiastic response from buyers. That means that they came, sellers took us all the way down here overnight, and there's a very good chance that buyers saw a good opportunity to get into the market. Now, I'm going to stop this and move on to the final replay that I have. And this is going to be right around the U.S. election on November the 3rd. All right, November 3rd. And this is actually, I believe this coincides with some of those long-term gaps that I was showing. Yeah, so here they are on 11.3, and we open on the gap up. All right, let's get back over to my replay. And I apologize, I did not set all right. All right, so here we are on 11.3. Let me get us quickly situated. On 11.2, this was our high. We opened up here, and this is our gap. And this was right around election time. 11.3, I believe, was when, the election was. If that was a Tuesday, I think it was. And we had a situation where overnight, again, thinking about what happened overnight, buyers were enthusiastic. They moved the market up, making overnight inventory long. And now what we're watching for in this situation is we had this close. And so far, again, you can find my time of day right up here. We're 2 minutes and 23 seconds into the market being open. What happened? All right, well, we opened up here. We had a little bit up, and now we've come a little bit down. All right, so now I'm playing at 2 times speed, and I'm actually going to move this up to about 10 times. We had a little bit of an auction up, but so far that gap is being filled. So the traders that moved us up overnight could be covering some of their positions. They could be selling those off and causing this counter auction. Now, because we're watching and because this was a gap up, because we're watching for this gap to fill, we're now 10 minutes in and there's been no gap fill, right? So they start to wonder, I'm going to speed this up even more. You start to wonder about what those, what those buyers who were able to get that gap up overnight, what they were really able to accomplish. For one, they created a gap up, but sellers, so the buyers brought it up. Sellers are able to take it down here, but it seems so far, we are now 45 minutes, 46 minutes in, and they've come down, and you start to wonder, all right, was that gap up? Were those buyers getting too long? Were they getting too ahead of themselves, or were they actually valid? Are they actually going to be able to take this market up higher today at 11.3? We're now about 20 minutes in, and it appears that attempt to fill the gap is actually a failure to fill because we've extended pretty far the other way. We're now 51 minutes into, we are now 21 minutes into the market being open, and there was this move down, and after some time, we saw that the buyers stepped back in and started to move the market up. And so after some of this time, and we're now looking at over 20 minutes, you have to start thinking about what the odds are, about what these traders are trying to do and what they're able to do. And after some time, you have to start to really think about the fact that the odds are going to fall. The longer the buyers or sellers are not able to take us in, the odds start to really fall that we're going to fill that gap in this session. And now you can see that we're starting to get some serious extension during the first 30 minutes during the A. And at this point, we know that the odds, the longer that we spend, far away from this gap up, we start to really look at that as, decreasing odds that those sellers are really going to be able to fill that gap. And when they don't fill early, this gives us one of our main takeaways from this particular replay is that when sellers are unable to fill that gap up early, then we start to see increasing odds that this thing is going to take off, and those buyers were actually, validated, and that move up overnight was validated. This gives us the takeaway then that when they don't fill that gap early, go with the direction of the gap. Now, you oftentimes, and I'm going to split these out into their own columns, but you oftentimes get your best opportunity on these gap days like this to watch volume and watch tempo. So on the move down during A period, we would want to look at what volume at each of these price levels is. Now, I don't have it on this particular one, and that's not the topic that I'm covering here, but I think I've got it over on, so here we are in 11.3. You can see we opened right here. The move down really tapered off on volume right here. And then we had this move back up. And you can see that, as we move back up, there was a lot of low volume because it really shot up and didn't spend a lot of time there to kind of accumulate some of those volume. And so, the volume drying up gives you a good sense that it's, you've got that opportunity to buy. The other thing, and it's just something that can't really be taught and that I definitely can't cover in this video, is just that on these moves down, and you may, if you've got capabilities too in your charting, watching these replays, you may want to watch to see if you can start to feel some of that tempo, because if volume, let's say that volume had gone, or let's say that the price had, opened here, gone up a little, and then went down really quickly, but then just slowed completely, you would detect that tempo has slowed down. And essentially what you're going to be reading there is that the move down really lost traction, lost a lot of that tempo, and that's going to be your opportunity to buy there too. All right, so this video's gotten kind of long, and I want to wrap it up here just by going over a quick recap. All right, so one thing that you can take away is that when we've got those gaps that appear, you can at least have a rudimentary or fundamental understanding of them being support or resistance. The reason being is that, and here we are on, let's look at, here, now that I've got 1123 and 1124 pulled up, you can see that we had a gap up here, filled it, and then went back up. And so you've got this, sense of general support or resistance, because if we gapped up and, there was no support here, sellers would have really taken us down. But instead, the buyers came in and took us back up. So that's sort of a general rule of thumb. And the reason, too, is just because if that gap holds, then nothing's changed really in terms of what the market sees as value. So it's just generally a good opportunity for you to begin thinking about some of the concepts around balance and imbalance, too. So building on that first point, too, secondly, your analysis centers on whether or not that gap holds in the morning. If it holds, you can consider it as near-term positive. So if it's a gap up, and buyers are still there, then they're going to move it up, and that's a near-term, bullish signal for the market. If it's a gap down and sellers step in, then they're going to take it down, then that's just some general downside traction. And so basically, it's just a matter of whether or not the market is accepting that gap. Third, you can use some of that early information that I've talked about, and specifically going back to one of the examples I shared, is just to watch for developing value. If you've got, so let's say we have a gap up and the developing value starts to be really overlapping to higher, then you can make some short-term conclusions about the market and what's really going on there. So you can say that, all right, we gapped up, sellers were unable to bring us back down, and then ultimately value started being established higher, and you can see that as a near-term positive sign for the market going up. And finally, these gaps can be used as ongoing reference points. And so I'm going to come back over to my long-term zoomed out chart here. Now, over the last... All right, so let's look here. In October, we had this move up at the end of October into November that went like this. And since then, we've been pretty much sideways into this tight range here. Now, one thing that we're going to be able to do now is that we know that the move up left two gaps. So this is the two that I've got marked down in this area, down here and here. So those gaps are still reference points for us to carry forward. If the market were to start moving back down like this in the ensuing sessions, so let's say in November 30th, regular trading hours, that we open up and just immediately start dropping down, well, that's going to be a near-term reference point for us to use. It would have to drop quite a bit for us to get back down there, but we do know that the market, left those gaps, and so they're going to be, interesting ones for us to carry forward. So, all right, so those are all the lessons that I wanted to share with gaps, and I'm going to leave it there.